Okay, let's talk about what's really going on with Ethereum. Forget the day-to-day price charts for a second. There's a much bigger, much more important story unfolding right under our noses. We're going to dig into who is quietly buying up ETH on a massive scale.
For the longest time, the crypto story was all about individual traders, right? The so-called retail crowd, chasing those wild price swings. But what if I told you the landscape has completely changed? A whole new class of buyer has moved into the neighborhood. And trust me, they're not just here for a quick flip, they're here to stay.
We are literally watching the market grow up in real time. It's shifting from this playground of short-term speculation to a boardroom of long-term strategic investment. It's not just about the price of one ETH coin anymore. It's about betting on the future of a new kind of internet. So the big question is, what changed? What happened to make these huge players suddenly jump in?
Well, it wasn't just one thing. It was a series of events, mostly between 2024 and 2025, that basically rolled out the red carpet for big money. These moments completely de-risked Ethereum for some of the world's most cautious investors and gave them exactly what they needed: clear rules of engagement.
So check this out. First, you get the ETFs in 2024, which is like an easy, regulated front door for anyone to walk through. Then, you get clear rules for stablecoins, a massive part of the Ethereum economy. And to top it all off, a new accounting rule makes it easy for companies to actually hold this stuff on their books. It was the perfect storm. So, who was first in line?
Well, first up were the usual suspects, the giants of traditional finance. They didn't have to get fancy. They just used a product they already knew and trusted, the ETF, to get their foot in the door. The on-ramp was finally built, and they were ready to drive on. And I mean, look at these numbers. The scale here is just staggering. By early 2026, these spot ETFs had basically vacuumed up nearly 10% of all the Ethereum out there. That is a huge chunk of the supply locked away. But as big as ETFs were, they were really just the appetizer. The next wave of buyers took it a step further. They started putting ETH directly onto their corporate balance sheets.
Yeah, this is where it gets really interesting. We're not talking about a company buying a little crypto on the side for fun. We're seeing the rise of publicly traded companies whose entire business model, their whole reason for existing, is built around acquiring and holding Ethereum.
This is a totally new corporate playbook. You've got companies like SharpLink using ETH to build out gaming infrastructure. You have Bit Digital, which created a whole staking as a service business. But one of these names, Bitmine Immersion Technologies, is playing on a completely different level. Their ambition is just wow.
Just let that number sink in for a moment. 3.52%. That's the percentage of the entire supply of Ethereum held by one single public company. And they're not done. Their stated goal is to eventually own and stake 5% of the entire network. The amount of income that would generate is just mind-boggling.
Now, I know what you're thinking. An accounting rule? How boring can you get? But seriously, this was a massive game changer. Before this rule, holding crypto was a nightmare for a CFO. Now, it's a transparent, manageable asset. This one little change unlocked the door for pretty much any corporation to start investing. But even they weren't the most surprising buyers. Okay, so just when you think you've got the whole picture, the most careful, most conservative investors on the planet decide to show up. We're talking about government pension funds. This is probably the highest form of validation you could possibly imagine for an asset like this. I mean, this is the moment. This is the ultimate seal of approval. A public pension fund, an organization responsible for the retirement funds of teachers, firefighters, and state workers, is saying, yes, we see Ethereum as a legitimate asset for our portfolio. That is a massive statement.
So let's recap. We've got the big Wall Street firms. We've got publicly traded companies building their businesses on ETH. And now we have state governments getting involved. It just begs a question. Why? What do they all see? What's the end game here?
So here's the secret. These sophisticated players, they're not just making a simple bet that the price will go up. They're investing in what Ethereum is, its core function as the base layer for a whole new internet of value. Think of it as the world's most secure and programmable settlement network.
The easiest way to get your head around this is the idea of digital oil, right? Just like our economy runs on oil to power cars and factories, the Ethereum network runs on ETH. Every single thing you do, every transaction, every app, it requires a little bit of ETH as gas. So as the network gets busier, the demand for this digital oil just keeps going up and up.
And while that demand is exploding, look what's happening to the supply. This chart tells the whole story. More than 40% of all Ethereum is effectively off the market. It's locked up in staking, it's sitting in those ETFs, it's on corporate balance sheets for the long haul. This is creating an absolutely massive supply squeeze on the open market.
And this is the future they're all buying into. A world where Ethereum is the trusted backbone for finance. With new laws giving clarity to stablecoins, this isn't science fiction anymore. We're talking about putting everything from real estate to private credit on the blockchain, even creating a trust layer for AIs to transact with each other. This is so much bigger than just a currency.
And this isn't just hype from inside the crypto bubble. This is a massive vote of confidence coming from the outside, from the world of traditional finance. The data backs it up too. The market for tokenizing real-world assets on Ethereum is just exploding, and surveys show almost every major asset manager is planning to get involved. Some analysts are predicting a 5-fold increase in value for Ethereum. 5 times! And that's not just a random number they pulled out of a hat. It's based on the idea that the market is finally waking up and realizing that Ethereum isn't just a coin, it's the world's financial computer.
So, what began as a quiet accumulation has turned into a full-blown roar. The evidence is pretty clear. A fundamental repricing of Ethereum is underway. It's no longer being treated as just another speculative digital token. It's being recognized as a piece of critical global infrastructure. But that's just the story the data tells. What do you think? Is this institutional flood a good thing for crypto's future? We'd love to hear your take in the comments. And hey, if you enjoyed this breakdown, make sure to subscribe for more explainers just like it. Thanks so much for watching.